Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it's working. Hope everybody is having a fantastic evening so far. Hopefully your trading's been going well. We've had some good things happen this morning. Awesome bankers close morning. We'll recap that. I have some swing trades that we need to take together today. I thought, what better time to do that than the COT report? Just want to kind of, reward you guys for coming to the class live. I love it when you guys come and participate live. And so I want to make it worth your time, want to make this very educational, and just provide value that way. So I am super excited. We've got a lot of fun stuff to talk about tonight. Also just want to welcome anybody new with us to the program. I had a couple of people join today, which was awesome. Had a few people that I got to meet, which is great. Got to meet you, Joe, today. That was awesome. And also just want to give a shout out to anybody in the recording. Just want to say hello to you guys and welcome you to our class today. But without further ado, let's jump into this. As always, I need to go over the disclaimer. I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money on that trade. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's talk COT report, because that's the first thing on our list, right? And I want to talk about what it is, what the COT report is for those that are new. And then in addition to that, the power of the COT report and how useful it can be in your trading. I've been using the COT report for years. It's honestly one of the greatest things that I do to do a top-down analysis on the weekends. I don't think any trader should go the weekend without knowing where the COT report is, and where people are positioning their trades, or at least make it a weekly event where you look at the COT reports. Even if you're a scalp trader, whatever you do with your trading, you should be looking at the COT report, and I'll explain why. But let's do this first. So what is the COT report? It stands for Commitment of Traders. So it tells you where the big banks are trading, where they're buying, where they're selling, how many positions they have long, how many positions they have short in the market. So it's extremely valuable information. It is updated weekly, so it's not something that's updated every minute or every day of the week. It's a weekly update. So that's why it's not necessarily in its best use for a daily scalp, but it is great information if you're trying to find out the overall direction of the market, over a a week or a couple of weeks, maybe even months at a time. And so you'll see how powerful it is in just a moment. But let's go over the COT report. How do you find it? You go to cftc.gov. Okay, this is a government website, obviously .gov. CFT stands for Commodities Futures Trading Commission, and they have the COT report, right? So these multinational banks are required, at least in the United States, who are on exchanges here in the United States that are regulated by the CFTC, they must report their positions at the end of the week. You and I don't report our positions to the market. We're retail traders, right? And many of us trade with different brokerages. You guys know I'm funded with a couple of companies, right? I just recently passed my FTMO challenge, which is super awesome. I did that last week. I actually did that in class, I think Tuesday last week, which is so fun. Pass an FTMO challenge in front of you guys, which was so cool, to be able to do that. And then I'm also funded with another company called the Apiary Fund. And I'm working on getting funded with another company. I don't know if you guys have heard of Funded Trading Plus. That's another company that I've looked into that honestly, I kind of wish I had started with them in the first place, but there are so many different prop trading companies to trade for, and I'm super excited to be working with them too to get more access to funding. But anyway, let's talk more about the COT report. So Commitment of Traders, and you just come here to Market Data and Economic Analysis on their homepage. You go to Commitment of Traders, and there's a lot of information. There's actually a lot of different COT reports out there, and all I'm asking you guys to look at is just this one in the futures market right here, current traders and financial futures reports. And you click on the long format right here. And it's going to bring up this huge list of data, and it gets really confusing. Okay, so I want to direct you to the stuff that isn't confusing and to the numbers that you guys should be focused on. I also like to zoom in. You can just do a control plus on your computer and zoom in, or control minus, and you can zoom out. And then also, after I zoom in, I like to do a control F and just search whatever I'm searching for. So if I want to search the Australian dollar, I just search AUD, because that's the abbreviation of the Australian dollar, and it pulls it up, and it takes me straight to it. So I don't have to navigate, oh, where was the Aussie again? Where's the euro? Oh, I have to find if you do a control F, it'll change your life. It'll take you straight to where you need to go, right? And so I just do that, and it takes me to here. So here's the Australian dollar, and it shows you the number of contracts long and short by categories, right? So we have the dealer side of the market, asset manager side of the market, leveraged funds side of the market. And all of these can be very helpful, but after a lot of research and talking to a lot of different traders, I've ultimately decided to use the data from the leveraged fund side. The leveraged fund side, these are multinational banks who take outright positions. What an outright position is these are speculators who literally buy and sell currencies with the intention of making a profit buying and selling currencies. There's other companies out there like asset managers and dealers that buy and sell currencies for the purpose of selling products for their clients. People buy and sell currencies for the purpose of hedging their positions. Asset managers do that in the form of managing portfolios and things like that. And it's not always the best information to follow. So we align ourselves because we take outright positions. When I buy the euro, or I buy the pound or the franc, I'm taking an outright position, right? I am speculating that one currency will go up over another currency, right? So we want to follow these guys because these are the big dudes, leveraged funds, and these guys are the winners. Okay. They don't win every week. I'm not saying this is going to work every single week, but if you follow this and build positions over several weeks and you follow the leveraged fund side of things, there's a good chance you'll take a good trade. And you can combine this, and this is where my real recommendation comes in, is just use the COT report in tandem with what you're already doing, right? However you're managing your trades for the week, come in and use the COT report to help you take better trades. Like if you're already thinking about buying or selling a currency, check to see the COT report. See if that COT report aligns with the trade signal that you've got. It just gives you further confirmation. Okay, that's important to cover. I'm glad we covered it. Let's talk about the next thing. So leveraged funds, that's who we follow. Now, when you come down here, you'll see the long side and the short side, okay? This number right here represents the number of contracts long held by leveraged funds, okay? And this number is the number of contracts short. So we have 46,000 contracts short and 14,000 contracts long. What does that tell you about these banks? They have an interest in shorting the Aussie. And I don't know if you've been following the Aussie recently in a lot of different pairs. Not every pair, but in a lot of pairs, what's been happening? Aussie's been going down. You look at the Aussie yen. I've been shorting the Aussie yen. In fact, I have a trade I want to take with you guys tonight, shorting the Aussie yen. I'm going to show you that. Really great trade. Have you seen the Aussie Kiwi lately? Just absolute train wreck to the downside. There's exceptions, like you have the Aussie CAD that's been going up recently, which I actually recently took a short on. I'm going to show you that trade too, that you guys may want to get into as well. I'll show it to you. I've got it over here on the other screen. I'll show it to you guys in just a moment. And so yeah, really, really exciting stuff. Okay. So anyway, we'll talk about that. And then you can search other currencies like the euro. And then perfect. It takes you right here to leveraged funds. And you can see the number of contracts long on the euro, number of contracts short. all of that information is right there readily available. Okay, so what I do now is I come over here to my COT report. This journal is available to you guys. I will put it in the chat box. But I update this every week. I actually haven't updated this week's COT report. I'll do that in front of you guys right now so you guys can see it. But when you come into this journal, I have a lot of tabs in here. A lot of this is for stuff I used to do in the past where I would do these studies, and I would look at different types of COT reports. I would look at open interest, a lot of different things I would look at. Okay. But the tab I need you guys to work on is just the dealer side. So when you pull up the COT report, it might take you to the backup. This backup, honestly, I should probably delete, but it's the second tab where I update. This is where in fact, I wonder if there's a way to highlight tabs. Somebody let me know if there's a way to do that. But so you'll want to click on the dealer on this right here, and it's the second tab, and that's the one I update. Real quickly, let me answer Lee's question. Lee says, been away for a few weeks. When did you switch from using the dealer side? Honestly, it's been probably about the time, like it's been several weeks now. So I used to use this dealer side, in which actually I should probably change the name of this to leveraged funds. But I talked to a lot of other traders, and a lot of them told me it's more effective to use leveraged funds because they are the people that take outright positions versus like the dealers actually sell financial what's it called, currency products. So they actually sell currencies to the general market. They're not necessarily speculating like we are. And so although that may work, and has worked for us in the past, the best trades will be when you follow the leveraged funds. And I've back tested that quite a bit. It's not like so even though I changed probably 2, 3, 4 weeks ago to the leverage side of things, I've done many months of back testing, and I have found a lot of consistency by using the leveraged fund side. But yeah, to answer the question, it's probably been just 2 weeks minimum. It could be as long as 4 weeks. So, but yeah, let's go in here and update this. So here's how I do this. I'm just going to go in here, and this might be boring for about 3 minutes, but it'll be super exciting after I update it. But let me go in here and put this in. So I've got long and short side for the Aussie, the Euro, and all the other major currencies. I need to go in here and change that. So let me go ahead and add this. So I got Aussie first, right? 14,096. So I come back over here, plug in 14,096. And then I put in the short side, which is 46,455. And then that's done. So real quickly, this is cool because all of these other calculations that I have in here in this journal tell you, and they're derivatives of whatever I've inserted over here. Okay, so what's cool is this number says of all the outstanding positions, 23% of all the outstanding positions are long. So we're making sense of the raw data that's been given to us. Isn't that really cool? So we're making sense of it. So, and then 76 to 77% of all of the outstanding positions by these, the leverage fund side of the market, the people that take these outright positions, 77% of them are putting their money where their mouth is and shorting the Aussie right now. Kind of cool, right? And then you've got other things like this is the sum of all positions. This is the change from the prior week on the long side, the change in the prior week from the short side, some other information that could be very useful. I usually just focus on these two numbers right here, the percent long and percent short, and you're going to see how cool this is in just a moment after I finish putting in this data. So bear with me as I put the rest of this in here. So I'm going to pull up the Euro. Euro has 76,460 on the long side. And then on the short side, it has 79,804, 79,804. And then I pull up the pound. And again, I just do a Control F. It takes me straight to the pound. 54,861. 54,861. And then on the short side, I have 50,822. Okay. Then I do the Kiwi. It takes me straight to it. 14,406. And then on the short side, I have 21,465. Okay. And then I do the CAD and it takes me straight to it. I have 21,031. And then on the long side, I have 30,735. And what's cool about me doing this in front of you guys is you can tell me if I did this wrong, which is nice. Because we all have our fat finger moments, right? We punch in a number incorrectly on the computer. So you guys can stop me, but I've got 1,526 on the franc. And then on the short side, I have 12,577. Okay, and I just have two more to put in. I'll pull up the yen. And I've got 24,956. And then on the short side, 55,283. Okay, and then I go to the dollar. U.S. dollar. And I've got 13,044. Make sure this is it. Yeah, US index. Sometimes they have, let me make sure this is the right one. Yeah, I have 13,445. Okay, and then on the short side, I have 1350. 1350. Okay, perfect. So now I have all my numbers in, which is really, really awesome. Okay, so here's what we do, guys. So this is the fun part. This is the real fun part of the webinar, because now we can make sense of this information and use it to our advantage to make a profit in the market weekly. Isn't that the point, right? So that's where this comes in. So now we have this data in, and now we're left with these percentages. Like we know, okay, so this week, we know, in fact, let me update this. So this is updated every Tuesday. Let me make sure I got the right data. And so this technically, November 29th is the newest COT report we have. It's released every Friday, but they pull the data and they stop the data as of Tuesday every week, and then Friday they release it to you. So yes, it is kind of an older information, but even though it's older, I don't want you guys to think like, oh, well, it's older, I can't use it. No, it is great info, guys, because most of these positions that these speculators take last several months, or several weeks. So even if you're not to the most accurate information to the day or even a couple of days, it's still worthwhile information. Okay, so coming in here, guys, what I like to do is find the top 2 or 3 currencies on the long side and the top 2 or 3 on the short side. Basically, we're trying to find the strongest currency and the weakest currency. Okay, which is really cool. You're going to see how awesome this is in just a moment. So on the long side, what's the strongest currency? I can already see it. It's the pound. Pound is 51.91% long. Everything else is basically below 50, except the dollar just recently crested over 50% long, which is awesome. But everything else is below 50%. Okay. So I'm going to highlight in green. This is the most long currency. And then on the dollars also a very bought currency right now. It just recently switched. It was short for a long time. And now it's switched to the long side. Okay. The euro was also one of the more long currencies that's also switched. It's still 50-50, but it's not past 50% anymore. Now we have some extremely shorted currencies right now. Let's talk about which ones those are. So we have, I would say the franc is the most shorted currency. Look at this. Out of all the outstanding positions, they are shorting the franc right now in a big way. They've been doing that for weeks, but they are doing it even more now. Okay. So the franc's a great one. Again, you can see in past weeks, back in November 22nd, it was 87% short. November 15th, 84% short. On November 8th, 74% short. So you can see they hold these positions for several weeks, which is why I don't want you to feel like, oh man, this is kind of older information, because I'm telling you guys, a lot of the times they stay in these positions for a long time, and you have a long time to exit as well, right? Okay, so we've got the franc over here, very shorted, and then you've got the Aussie, I would say is very shorted. It's also been that way for weeks. Very shorted currency. And let's just pick one more, probably the yen, at 68, almost 69% short. Yeah, I'm gonna pick that one. Everything else has their bias, but not to the extent of these three. And so that's kind of what I've been doing, is I just pick the top 2 or 3 on each side of the market, and then we go with that. So now that we have our top, here's what's fun now. Let me give you a little analogy of what we're doing here. So our goal is to take the most shorted currency and pin it against the most long currency. So we want to find the currency pair that's most likely to have the most extreme movement based on what the banks are giving us here. So if they're buying a currency and specifically isolating that one currency, and we know they're shorting another currency and isolating that currency, we want to fuse those together into a pair and then take a position, an outright position based off of that information, so that we can take the most logical trade setup. Now, we don't necessarily just stop on one currency pair. I like to try to find the top 4, maybe the top 6 currency pairs to trade for the week. And these are trades that you could hold all week, perhaps carry over into the following week, depending on the new data that you get, but it could be very valuable information. So I like to use a sports analogy, because it is, we're during that time of sports. I'm a big college football fan. We just selected the 4 teams that are going to the playoff this year. And those are like the very best currencies. That would be like saying the pound versus the dollar, right? The very best currencies to buy right now. I don't know if that's a good combination. You think about it, right? Because those are the strongest out of everything's very weak. If you look at this, most currency pairs are below 50. Most places, most institutions are shorting currencies right now. But of all of the currencies that are pretty shorted right now, these are the 2 best ones, right? And so you wouldn't want to short these guys if you can avoid it, right? So now, does that mean there's opportunities? Does that mean there's not opportunities to short the pound throughout the week? No, there's tons of opportunities. I'm just saying that the overall direction, your mindset should be thinking, maybe I should be buying more pounds, maybe buying more dollars based off of this information that I'm getting from the banks here, right? Um, and then you have, the franc, same thing. There's opportunities to buy the franc, but right now there's more banks selling the franc. So what I like to do is think of this, guys. We're trying to find the best team in the country and pin that best team in the country against the worst team in the country. We want to set them up on a football game. We want them to play together. Obviously, the best team in the country is going to trounce the worst team in the country, and that's what we're doing with this whole spreadsheet is to help you find who's the number one guy and who's the worst guy, pin them together, make a championship game against those two teams, right? That's kind of the concept. So what's the most natural thing? Well, if the pound is the best, who's the worst? Oh, the franc is. So what's a natural currency pair if you have the pound and the franc? The pound franc, right? Pound franc currency would be and it's actually been that way for the last several weeks. It's been that. And where's the pound franc been going overall? I mean, it's down days, right? But overall, over the last several weeks, where's the pound franc been going? Up, right? Probably a reason for that, right? Kind of cool. So yeah, I'm already going to put that in here. Yeah, pound franc again for a third week in a row is the number one currency to buy, right? Really, really cool stuff. And then let's go ahead and set up our top 6 based off of this information. Who are our top 6? Oh, I don't know, the pound franc is the top one. So who comes in second place? Well, what I like to do is I like to take the pound, pin it against, obviously, first place on the short side. Who's second place on that side? Oh, the Aussie is. So pound Aussie would be the most logical thing to buy outside of the so this comes in second place, which it was in third place 2 weeks ago. Now it's in first place, or it's second place, so it's moved up a little bit. Who comes in third place? Take the pound and against the third place of the short side, probably the yen. So the pound yen would be the next most logical thing to buy. I'm trying to think, that wasn't an option 2 weeks ago. So this is the first time the pound yen has been an option. So that's still a buy, right? Who comes in fourth place? So now I'm going to take the dollar, pin that against the worst. So we have the dollar franc. So now we want to buy dollar francs. Now I will warn you guys know the dollar franc's been going down recently. This is a new signal, which is awesome because now we can be one of the first to this trade. Okay. The dollar franc has been going down, but what's cool is the dollar franc has been coming into a significant buy order block on the higher time frame. So it makes sense that the institutions are starting to flip and starting to buy that currency now, something that they might hold for several weeks at a time. It's really cool to see this happen. It's a slower moving thing, but it's fun to see them kind of make their moves over time. So that would be the next most logical thing, would be a dollar franc long, okay, at fourth place. And then you'd have probably the Aussie dollar. And this would be a short, not a long. Why is it a short? Because the base currency is the Aussie, and that's the first currency in the pair. So, and we know that the Aussie is short, so we want to sell the base currency. That's why this is a short. And we're subsequently buying the quote currency, shorting the base, buying the quote. And how do you do that? It's by shorting that instrument or that pair. You're selling it. You're getting that setup that you've been looking for. So the Aussie dollar short would be the most logical thing to trade based off of that information. And then what's the last one? It'd be the dollar against the yen. So dollar yen. We'd be looking at a dollar yen long position. JPY long. Okay. And that would be in sixth place. Do I like trading the top currencies more? Yeah, I do. I really do like, but is it bad to take the sixth place position? No, it's not a bad thing to do. But I do like taking the top currencies first. Here's why I like trading, for example, the pound franc. How long has this been in first place? 3 weeks in a row. That's a long time to be in first place. Okay. And so here's my kind of theory. Here's my thing with it. If it's in first place for that long, even if the pound started drifting away the other direction, or if the franc drifted the other way, it would still take a while for it to move out of the list. So we're only ranking the top 6 currency pairs. There's like 27 major currency pairs, and we're only ranking the top 6 currency pairs. You're not even ranked if you're not in the top 6, right? It takes a while for the top guy to move out of the top 6. Eventually, he'll move out of there and somebody else will take their spot, but it will take a while, right? So this is huge, guys. So this is updated. This is it right here. Take a picture, take a screenshot or whatever, or, I'll just get you the link here. Let me put this in the chat box for those that want it. Also, for those of you that are on YouTube watching this in the recording, if you guys want to come to these live classes and participate and start taking these trades as we take them so that you're not late to them, there's a link in the description below so that you can start coming to these live classes. There's a 14-day free trial. You can start coming and start taking these classes, which is super awesome. But and for example, I'm putting this link in the chat box. You'd have access to that link if you were in the live class. So, all right, here's the link, guys. Here it is. So just put it in the chat box there. Bookmark that so that you can come and use that. Bookmark it into your browser. There's a few other links that when we trade the Banker's Close, there's a couple of websites that I recommend you bookmark. Forex Factory, you have to bookmark that website. It's if you're a Forex trader, you have to, right? It's just one of the best resources out there. Another one is the MATAF website to figure out your stop loss, the Banker's Close. If you have to walk away from the Banker's Close trade, you got to bookmark that MATAF site, right? And anyway, we'll do that tomorrow, but there's a few resources that I try to be really consistent with that I want you guys to use and utilize in your trading, and just really great information and stuff to be utilizing, right? Okay, guys, so these are all trades that you could take. And there's a lot of different ways you could trade these pairs. What I would recommend is don't just blindly take a buy on the pound franc, although you are more than welcome to. And you've got a better than 50% chance, in my opinion, that trade's going to work out. Probably much better, but I mean, I don't know. I think no matter what you do, you should still have a strategy behind your entry, not just, oh, the COT report says buy, let me go ahead and buy. So for example, if I wanted to buy the pound franc, which I do, let's pull it up on TradingView over here. So if I wanted to come in here, here's the pound franc, here's an hourly chart. You can see, look, ever since that became a first place signal, when did it, look at it. When did this become first place? The 15th of November. Where was it on the 15th of November, 2022? Where was it? Right there. When it was at a low, that's when it said, hello, time to buy. I love that. Right? Look at that. 400 pips of opportunity over the last 3 or 4 weeks, right? And they're not even done yet. They're not even done yet, which is so cool, right? So, okay, so supply and demand traders, I teach supply and demand. I teach supply and demand zones. You've got the Sonar Lab order blocks. There's a ton of ways you could look at this and look for opportunities. Like if I were trading this, I'd be looking for supply and demand areas. So, you're looking for break of structure on an hourly time frame here. Oh man, I'm mad I missed this trade. Oh man, but it's fine. There's more opportunities. For example, this was a structure zone right here. Right here, this resistance, and then this would be your demand zone, because this is the last consolidation that created the breakout of that resistance. That's a break of structure. So naturally, if the market ever were to come back and retest the mechanism that created the break of structure, then that's a good chance that you're going to get a good trade out of this. And sure enough, the market came back down and touched right into that supply or demand zone that created that breakout of structure. This is how I would trade the COT report. Now you've got 6 pairs to focus on, right? And you're looking for opportunities in that one direction to trade all week long. Okay. And if that makes sense, right? Jason says, hey, Steve, I found a way to make the order block area square that you use. Oh, that would be awesome. right click on it and open the window. Let me see. You know what? Why don't we do this? Let's see, settings one. Okay, let me see. Let me see. Do. And then let's see, what would I do from here? You know what? Jason, let's meet together and let's talk about that just because I've got some other things I need to get to. But yeah, let's definitely talk because obviously that's a huge part of our trading is these order blocks and how to trade supply and demand. Okay, sweet. Sweet, sweet, sweet. Okay, so this is how I would trade it, guys, is basically you have your top 6 here. Now you go and refer to this and you say, okay, great. I don't have to look at all 27 pairs. Although you're welcome to trade as many pairs as you want, I think it's kind of nice when you have a focus. You're like, hey, I know that these are the pairs that are most likely to have a move in this direction. And what's cool is you're eliminating the other direction because you only want to trade in the direction of the COT report. And like I said earlier, there are times when the pound franc is going down, even though the signal is to buy, right? Like even in this last 3 weeks that it's been on this juggernaut ride to the upside, obviously we want to be buying, but sure, like can you imagine if you're taking a scalp trade and you put 10 contracts buy right at the top there? Yeah, you're going to lose big time, right? You're going to have a big losing trade. So yes, you do want to be strategic with how you enter, even though the COT report is telling you to buy or sell something, right? And so that's how I would look at this and say, okay, here's my focus. Great. Now let me try to find supply and demand zones based off of let me try to find supply and demand areas based off of the COT report, knowing that I only need to focus on these 6, which is really awesome. Okay. Okay. Now, obviously, I'm kind of mad because that trade probably, when did this happen? Last night during the London session. Dang, I'm mad I didn't take that because that would have been you'd be up 70 plus pips right now on that trade. That's okay. We'll get more trades, right? And I actually do have another trade that I'm in right now. That I'll show you a couple of other trades here. So anyway, that's what I would do with this. So again, when you're looking for supply and demand zones, like even with the euro pound this morning, actually, let's just do it over here. We traded the euro pound for our bankers close trade. Let's go to the 5-minute chart. We traded this today on the banker's close. And honestly, I'm kind of bummed that I didn't keep buying this. So basically the banker's close window was, I won't draw it out because I got other stuff I need to do, but this was the banker's close window, this consolidation. We bought when the market came down here. I sold out most when it came up here. There was a second opportunity to buy into here and then ride up until now, but it's not technically a banker's close trade. It's more supply and demand trade. Here's why. One of the things we identified this morning for our banker's close trade was when we were looking at this 5-minute chart, look at these supply demand areas. Okay. This is a supply demand zone right here. Okay. There's another one right here. Technically, this whole box is a supply demand area. Because basically, when you zoom in, these were the consolidations, these little moves down and sideways. Those are the things that created the breakout, that caused this market to break out of its structure to go up from where it was. And so I knew that if the market were to come down, there's a good chance that this banker's close trade would get support in these areas, just like it played out. I mentioned this morning, if you want to go back and watch the recording from the banker's close, that when we were buying up here, I said, okay, hey, we might be buying at a higher price because it looks like the next demand zone is in these areas down here and down here. And I said, but it's only 15 or 20 pips away. So I'm okay with that being drawn down 15 or 20 pips because in all likelihood, if we did go down 15 or 20 pips, there's a really good chance the market will try to bring that back up. Okay. And we had reason to believe that because we had supply demand areas down here. Okay. Obviously we got out, we made our money in the webinar today, like we wrapped up at the top of the hour. We honestly made our money just on this move right here. It's just a 10 or 11 pip move. We made our money and we got out. It was good. But I think there was more money to be made if you were willing to hang on and buy into these areas and then ride that out all the way. I didn't, to be honest, I didn't capture that move, but it was my secondary plan. It was my plan B if I didn't make money in the webinar today, was to hold out to those levels and then wait that out. We would have been fine. Okay, so let's see, why was I showing you that? Oh, just because we're talking about supply and demand zones. I told some of you guys that we talk about supply and demand and how to identify them. Real quickly, I want to show you guys a trade that I want to take tonight, and I need to do this. I need to take this trade on my own account first, and then I will post this a little bit later tonight. I'm sorry if my signals have been coming out a little later. Maybe what I'll do is I'll take the most important trades, the ones that I'm really confident about, and I'll get those posted quickly tonight. And then if you guys want to take those, you can. They're going to be more swing trades, so don't feel bad if they don't trigger right away, just because they're going to take a little bit to trigger. I mentioned that this morning. But this is a trade I've been working on. It's this Aussie yen. In fact, I'm curious, how does this fit with the COT report? This one's more, so the Aussie is short, but the yen is short. So this one is a little different, a little bit of a different trade, but here's what I'm looking for. Down here, we looked at this morning on the hourly chart. Down in this purple area is some massive demand. We haven't gotten there yet. The market's still, 100 pips, a little over 100 pips away from it. But if the market got to this purple area, you definitely want to be a buyer. Okay, it's been short for a while. You can see it's been coming down for over a month, maybe 2 months now. It's just been kind of coming down, but that will change if we can tap into this area. And I'll show you, if you come over here to the left side of the chart, look at this, guys. So this is obvious break of structure, classic break of structure, supply demand zones. And I want you guys to work on these, look for these, send me screenshots. If you find your own, show me your analysis. You guys can actually make a little recording, a screen video, and send those to me on Telegram if you want, and just kind of communicate with me that way. Like however you guys want to participate in this program that we have together. I want to be available for you guys to ask those questions and make yourselves profitable, right? So look at this one, and we'll probably wrap up on this, and then we'll wrap up the webinar. But this is a trade that I am super excited about, because once it triggers, we're going to make a lot of money on this trade, a lot of money. Okay, so basically, back in May, the Aussie yen was back over here. And it created this consolidation, but most importantly, it created this structure right here. You can see that this is resistance, and it used to be support. Like if you go back in time, you can see it was support here. It's a little bit of support over here, and then it broke, and then it became resistance later. And so that is structure. Okay, wherever support became resistance or resistance was support, and over time it's a respected level, that's also called just structure. Okay, so that's it right there. And the market broke out of it, and it went on this huge run, and it pretty much lasted for months. Okay, for the whole summer and into the fall, it just left that. But now we're approaching it again. We're only 100 pips away from this level, so it's something we want to pay attention to now, because it could turn into a massive trade with the type of reward to risk ratio that could change your life, right? So basically, here we are, going back and looking at analyzing the left side of the chart, and we want to find the mechanism that caused this huge breakout, and not just this huge breakout, but the thing that broke structure, right? This is it right here. This is the thing right here. Whatever the market did right here, this consolidation was the last area where the big banks really put on their big position and then caused this huge breakout. So let me ask the question. If the market comes back into this area, what's likely to happen? Likely a rejection. And I do need to make sure that, just disclaimer on this, it is likely, it's not a guarantee, but it is likely that the market will reject this area. And we want to have a trade ready to go that could make quite a bit of money if it works out. Now, obviously, we have our stop losses in to manage our risk, which I totally recommend that you guys all have your stop losses and that you know, determine how much money you are willing to risk on that trade. Because again, I don't take responsibility for your losses. I'm not a financial advisor. So when you guys take this trade, please do that part, your own due diligence when you take the trade. Okay, because that is your responsibility. Okay, I'm making that clear right now. But nonetheless, I'm really excited. I'm definitely going to be taking this trade. Absolutely, I'm not going to miss out on this because it's going to happen here hopefully pretty soon. I don't think it's going to take too long to go 100 pips this direction. But yeah, so this area right here, this blue line would be the beginning of that structure, and we definitely want to be a buyer in that area. But this is support and resistance. A lot of people just buy at support. It's not necessarily a bad idea, but it also can be a bad idea just to generally buy at support or resistance. We want to buy at supply or demand. This is supply and demand down here. This is demand. Demand is right here. This is support resistance. This is demand. So there is a difference between supply and demand, support resistance. A lot of people like to lump them together. They are different. And I do want to make that clear. Okay. So now that we come forward and we know this piece of information that 99% of retail traders are not aware of. Can you imagine being a retail trader coming back over here to where the market is now? Can you imagine if you were a retail trader and you were selling this and you came right into this zone? How would you know to take your profits? So actually, that's another thing. I'm thinking about shorting this, guys, and riding this to this supply demand area for 100 pips. It's another trade I'm thinking about taking. So I'm going to try to ride this both ways. I'm going to ride this down and I'm going to ride it back up, right? So it could be really awesome. It really could. Okay. So anyway, I'm looking for the market to come into this area. I'm going to place tonight a buy limit right here, and I put my stop right here. So my stop loss is still going to be like, guys, think about it. This is still 100 pip stop loss. Like it's a big trade, right? And just keep that in mind. Like if you take a, I don't know, a standard contract, and it does hit its stop loss, that's going to be like $1,000 loss. You know, if you take 10 contracts, it could be as high as a $10,000 loss. So I want you guys to be aware of those things before you get into them. Now, if this thing wins, I am going to be looking for at least a 2-to-1, probably a 3-to-1 reward to risk ratio at minimum. So if this market comes into this area, I'm going to be looking for, you know, something like this at minimum as my target. And yeah, I'm going to try to make thousands of dollars just on that move right there. And it should happen quickly. When these markets tap into supply demand areas on a higher time frame, the market usually is pretty rewarding very quickly. I mean, in fact, I've had a couple of these trades that I took 2 weeks ago, that USD franc trade, exact same setup. Market tapped into an hourly demand zone. By the time I woke up in the morning, I was up almost $5,000 on that trade. I talked about that trade this morning. There's been a lot of other trades we've taken similar to it recently. But yeah, so anyway, that's how you find supply and demand zones. Okay. But how do I originally find these in the first place? I look for currency pairs on an hourly or a 4-hour that are already close to a multi-month support or a multi-month resistance, because you can find a lot of them that way, by just going out to those higher time frames and finding which ones are moving down a lot and which ones are moving up a lot. Obviously, this one's been moving down a lot. So naturally, I want to go to the left side of the chart to find out where's the next level. And this is where it is right here. So will this market go back up from here? It could. I don't believe it will. There's a lot of reason to believe this thing is going to come down. And so that's what I'm preparing for right now, just so everybody knows. Anyway, I gotta I'm gonna take a lot of trades tonight. I'm gonna get a lot of stuff prepared. I'll get that sent out in Telegram for you guys to take. But I'm gonna go ahead and wrap up with that. You guys have my link, so you guys can come here and you guys can um, do what you want with the COT report. I've given you some tips and tricks on how to use it. Um, again, if I were to use this in my way, I would be looking for supply demand areas in the direction of the COT report. Okay. And then just looking for ways to take those. You can trade it really on any time frame, 5 minute, 15-minute, hourly. Those are great time frames to trade on using the COT report. So, all right, guys. I really appreciate your attendance today. Thank you for coming and staying to the end of the webinar. And also, again, reminder for those of you watching this in the recording on YouTube, please subscribe to the channel, like this video if you thought it was helpful. If you want to come to these classes live and come to these trades first thing, I also host my Bankers Close trade, which is every day, Monday through Friday between 11 and 12 p.m. Eastern. That's every day. If you want to come and make money with us live, there's a 14-day free trial that you can click on in the description below where you guys can join us in our live trading classes. So, and that is reserved. I don't post, I don't do a YouTube live. It is only for my clients and my group. So if you want to come live, you have to join. So anyway, guys, thanks so much. Thanks for coming, and we'll see you in the morning for our Bankers Close webinar.